Let's talk about a topic that's a little bit tricky, a little bit shunned upon to talk about in the crypto space, and that is exit strategies. What situations and at what point and what methods should you take to exit your crypto positions? Now, this is not me saying that crypto is dying, we're in a bear market, sell your position. It's not me saying that. I've simply received multiple requests from people who are new in the crypto space or just new to investing in general, and they want a better idea of how to think about profits, making profits off of their investments. And me personally, I do not blame anyone ever for locking in profits, especially if it is a meaningful amount in their lives. I would never blame someone for taking profits. So I wanted to do this a little bit differently. I've seen plenty of exit strategy revealed videos on YouTube, but I think the most important thing when it comes to an exit strategy isn't so much the method. There are some very helpful methods, but I think it's more important to think of the situation of the individual and then offer methods for that situation. So we're going to go through a few different situations that you may be sitting in with your investments. This also works for stock investments, not necessarily just crypto. We're going to go through various scenarios and then options for each one of those scenarios. And I think that will help you build a better picture of what to do and potential options that you have. Now, none of this is financial advice. I'm giving some options, and this is by no means the only options for exit strategies. There are a million different ways that you could do this. So in order to highlight all of this, of course, I have built a flowchart. You guys love the flowcharts. I love the flowchart. Everyone loves the flowchart. We need to have flowchart merch. Someone was commenting that. So if you come up with some funny or interesting design for merch, let me know. So anyways, jumping in here, crypto exit strategy. Bye, Felicia. So first off, like I mentioned, your situation upon investment is the biggest factor here in my humble caveman brained opinion. So we're going to overview the different situations and then we'll get into the details of each. So the first situation is a short-term trader looking for the fastest return. You have a high risk tolerance and you have money to lose. This isn't all of your money. Next, we have the short-term trader who has a high risk tolerance and doesn't have money to lose. They are too invested into crypto. We have some suggestions there. Next, you're a long-term trader and you would like to profit off the volatility of your various positions if possible. And then finally, we have long-term trader with a very high conviction in crypto technology, or you're a long-term trader who is investing a relatively small amount of capital, at least relative to your total investment portfolio or relative to your net worth. So we're going to start off here first with the short-term trader looking for the fastest return. You have a high risk tolerance. You're willing to accept volatility. You're willing to accept your portfolio to be all over the place, and you have money to lose. And what I mean by that is you have assets on the side that are not invested into these volatile investments that if you lost 100% of your position, you would be fine. So this is short-term traders looking for a fast return, high risk tolerance. You have money to lose. So this is someone betting on price swings and not the success of a project. Now, this is important. If you're a short-term trader, it really doesn't matter a whole lot what's happening with a project, what they're going to do in 5 years, 10 years. What matters a lot more is news events that come out and especially hype around that project. That matters far more than what they actually do in the long term. And first off, you want to determine the gain that you're actually aiming for. Are you trying to get a quick 5%, 15%? Are you trying to go all the way and double your investment? It's good to sit down and think about that a little bit before you actually buy or right after you buy. What is my goal here? Because if you have no goal, your odds of losing money are dramatically higher. So here we're going to cover some various options that you have in this situation. First off is a simple limit order. Placing an order ahead of time to sell your asset, your crypto or your stock or whatever you're selling at this point at a predetermined price. So here's an example. You buy ApeCoin at $5 and you're shooting for a 20% return. So you can simply set a sell limit order at $6 and you don't really have to think about it. If it hits $6 in the middle of the night when you're sleeping, dreaming about making even more money, it just sells, you make your 20%, and you go on your way happily with a nice 20% return. Downside here is your order is not guaranteed to be filled. You could have a price spike up to $6. There's not enough liquidity. It may not get sold at that price. Another option, I'm calling this option chunks. There's probably a technical term for it, but I like the word chunks a lot better. Plus, it's kind of funny to say. So this is where you sell a percentage of your holding at a predetermined tier of pricing, of price increases. So let's break this down a little bit further. Here's an example. You invested $1,000 in Booty Coin at $10 per coin, but you want to avoid your greedy inner ape. We all have this deep down greedy inner ape. So here is a strategy that you could take. You could set up, you might want to do this in a spreadsheet or something. This takes much more attention. This isn't like a mindless approach. You could do something like sell 15% at $11, which is a 10% increase, sell 15% at $12, sell 30% at $13. So basically every 10% increase from your initial investment, or every $1 increase from your initial investment, you're selling off a chunk, and then you could just keep 10% at the end to ride it out. Now that's one strategy. You could think of a million different ways to set this up, but that is the chunks strategy. Chunks. Okay, next situation. Short-term trader, high risk tolerance, don't have money to lose. Frankly, this is not the investor you want to be. This is the YOLO community. You're throwing it all in on red. So first off, you want to determine if you are in this group. Here's a method to go about it. I don't recommend, I'm not a financial advisor, don't take my advice, but this is the riskiest group of all of them. So first you want to determine the gain that you're looking for, as well as the loss that you can accept without selling. So you want to sit and think, am I aiming for a 5, 20, 30% increase? And also, when should I sell? Should I sell if I lose 10%, 20%, 50%? If it's a meaningful amount of money, like money that you need to pay your bills, you don't want to lose all that money. Now, again, this is not a situation that you want to be in, but I know there's people in this situation, so I just want to address this. This is not me saying you should invest this way. So you want to determine how much you want to make, how much you're willing to lose before you potentially sell. And again, this group, this matters. What matters a lot more here is not the long-term outlooks of this project, but instead short-term news items and hype around that particular coin or investment that you're in. So here's some options. First off, that limit order, the exact same thing as the other example. You could set a sell price at 20% up, 30% up, whatever your goal is. You can set that. Don't even have to think about it. Hopefully it hits that, it sells, you make your profit, you go home a happy little caveman. Next off, chunks, same as above. You could set up a strategy where at various tiers you're selling off portions of your investment. A trailing stop loss. Here is a way to limit the downside. So this is setting a sell order at a percentage below the prevailing market rate of that cryptocurrency that you hold. So here's an example. You buy some Bitcoin and you buy it at $1 with a 10% trailing stop loss. Now how this works is if the price drops to 90 cents, which is 10% lower than your $1 buy-in price, a sell order will initiate. But if Bitcoin goes up to $2, the new stop loss would be $1.80, which is 10% below the new price that it's set at. The only downside here is most crypto exchanges don't have this feature, and you have to pay capital gains tax on all profits. So just remember that when you're doing a lot of trading, this applies for more than just this strategy. When you're doing a lot of buying and selling, you have to pay capital gains taxes on your gains. So just something to consider when you're doing a ton of buying and selling. Another option is playing with the house money. This is kind of a psychological trick because you still technically are losing money, but if you lose house money. But anyways, this is where you make a profit and you just pull out your initial investment. Let's say you put in $100, it goes to $200, you pull out your $100 and you just let that $100 ride because it doesn't really feel like that's your money. It feels like it's the house money, but again, that's kind of like a psychological thing because it is your money. If you lose that 100, it's no different than losing the initial 100, but you feel less attached to it because you didn't have to work quite the same for that 100. So that's one way to just pull profits, let it ride, and at least you don't have the potential to lose the profits that you pulled. So there's some various options for that group, but really with this group, the best option is to have safe investments first, and then if you want to have a little fun speculative bucket, to put that in there and to just have proper expectations. Don't be greedy, because the greedy folk are the ones who lose their money. Okay, next tier of people. Long-term trader, however, you'd like to profit off the volatility of your asset if that's possible. So you believe in the project long-term, you believe in the technology, but you know that there's going to be price swings and you want to try to, make 5, 10, 20% here and there as it goes up and down. So this is, like I've written here, this is everyone's goal, but it's far easier said than done. I mean, I'm sure you've heard it before. don't try to time the market. That is exactly this. Also, side note, check out the Patreon if you haven't already. That is linked down in the description. We are still limiting the spots. It's very limited. There's only a couple spots open. You'll get things like buy alerts, my research notes, a community of people on the Discord investing in similar things. That way you won't make any crazy rash decisions if there's a market swing up or down. Go and check that out if you are interested. Plus, while you're down there, check out the crypto exchange that I use. You can get some free Bitcoin. You can get some free stocks. There's tons of cool options down there. So this is everyone's goal. Easier said than done. Don't try to time the market is what they say. So this is what you want to do. You have to be vigilant. You have to keep an eye on the volatility of that coin, the support levels that are created. You want to take a look at the charts, maybe get kind of familiar with technical analysis and the resistance levels, and decide how much of your position you are long on and how much of your position you want to trade with. Are you long on 80% of your position and you want to try to get some profit from the swings on 20% of your position? You want to decide that ahead of time, again, so you don't make any rash decisions in the heat of the moment. So here's some options for you. First off, limit order, like I mentioned earlier. Chunks, like I mentioned earlier, you could do this a little bit different. You can do the same above, but with smaller chunks, or maybe you're only selling off 20% of your position over various price levels. Again, you can mix that up, mix and mash however you want the chunks situation to be. Playing with a percentage of house money. So instead of selling your entire initial investment, you could sell half of it or something like that. There's some options there. That's basically what I have written here. Or dollar cost average out. Now you could do this with the other strategies as well, but this is basically just selling on regular intervals to hedge against volatility. So let's say you invested $10,000 and you want to eventually pull out $3,000 of that. You could pull out $200 every single week for a period of time. That way you don't have to worry quite as much about volatility. However, you'll pay more transaction fees in the long run, but there are advantages to that. And dollar cost averaging in really is the best method if you are holding long term, because again, you're hedging against all that volatility. Now let's talk about the last group here. This is the long-term trader with the highest conviction in crypto as a technology. Or this is the long-term trader who is investing a relatively small amount of capital, at least relative to the amount of assets they have. If you have $1 million and you're going long on some kind of $10,000 trade, it doesn't really matter short-term what happens to that $10,000 trade, because your life is not going to be affected by that $10,000 sitting there. So here's some options here. This is the easiest position to be in mentally. You really don't have to worry much. You don't have to think much. This is really all upfront work with very little long-term work. So what I mean by that is you do your diligence upfront, you do your research upfront, you pick a few coins that you want to invest in, you invest in them, and you just think, that's going to sit there for 10 years. I don't have to think much about it. You can follow the news if you want to see if there's any fundamental changes. Did a founder leave? Did they make some new contracts? Things like that, but generally you don't have to think about it a whole lot. And here's some options if you're in that position. First off, HODL. Just simply hold and accept the fact that there's going to be extreme swings in volatility, and you could potentially buy dips, things like that, if you are very long and very hopeful about a project. You could sell a portion of your position if you need to buy something. If, let's say, you invested $10,000 and you're one of the lucky people that 10,000 turns into 10 million, and you want to go buy a jet ski for your house down in Miami, you could just sell $13,000 of your position, buy that jet ski, let the rest ride. Of course, this is the best position you could possibly be in. Or you could dollar cost average out, again, to hedge against volatility. Or again, if you're one of the lucky people who sees a 1000x multiple or something crazy like that, and you want to diversify a little bit, you could dollar cost average out, put it in something else, diversify a little bit, hedge against, placing such a large percentage of your portfolio into one area. So that is going to do it for all the various options. I'm sure there's scenarios that aren't covered here, but I wanted to cover as many people as possible. And I think this is an important topic to speak on. Now, for me personally, I am in the long-term category for basically all of my crypto investing. I try to find projects that I'm like, okay, this has a very long-term outlook. I want to be able to buy in and not even think about what the price is. And that's what I do. I don't think about the price of my various crypto investments most days, really, unless I'm making a video reporting on it. That's kind of the only time I look at the price, just for some reference as to what exactly is going on that day. If you found this at all helpful, make sure you hit that like button, share this video with someone you think should learn a little bit more about exit strategies. Don't forget to subscribe. I can't believe how many people have already hit the subscribe button. More than 250,000 people. That blows my mind every single day. But don't forget to subscribe, because I wouldn't mind having 250,001. But also, I would just like to thank you for watching. And of course, as always, I hope you have a profitable day.